Welcome, traders. Welcome to Money Mitch. I'm Money Mitch, of course, guys. You guys can find me at Story Investors. Definitely look me up on Twitter, guys. I'm here to tell you guys about market sentiment today, notable earnings, an interview with PubMatic CEO, and of course, the story that is opening stocks. So definitely stick around, guys. We got a great show for you. Welcome to Money Mitch. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch. What's going on, team? What's going on? Having the time of my life. You guys already know. Nicholas knows a little bit of something. Might have stuck with my Twitter. You guys already know. Hanging in there. What can we do? We're going to do what we can, and we're ready for Money Mitch. I got a great interview for you guys. I've been waiting to get this out, guys. I actually recorded this earlier, and I'm going to get this out for you guys today. But you guys, just wait, guys. You guys know how I've been in the programmatic space. I've been looking at PubM. Can't wait to get to that interview. We'll get to that if we get to our light goal right here in the middle. But let's go ahead and let's talk about the market and see what we found out there, guys. So I'm going to really quickly let's do something a little different today, guys. So one of the things I want to do, guys, is I want to get into the market, but I want to do a little bit different here. I want to talk about how the overall market went sideways here today. We're going to talk first about the SPY here, but I'm actually going to be on the computer here so I can show you guys a little bit more of my skill here, my technical analysis here. So I'm actually on the computer, can break down some stocks here today. So a little bit later, we're going to do a little special. If you guys got a stock you guys want me to check out, I'll do a little stocks from the ticker, from the chat. So definitely stick around, guys. Stick around. All right, let's get into the SPY. Overall market here, guys, looked like it went sideways today. If we look at the hourly, we've been looking at this. I had this box still pointed out from last week. So what we're going to do, guys, is we're actually going to point these over a week here, and we're going to pull them over and kind of shift them on over because – we want to see what happens. Are we going to get out of this trend or are we going to keep going into this trend? So I'm going to just shift them over and we'll just keep kind of riding up this wave here, seeing if we come back down or if we come ripping up through the 420s. That's really what we want to see. We want to see this motion come right back up through here, get back up there, rip back up there and start breaking out on the SPY. But if we look here, definitely just a sideways kind of day. But let's take a look at the Qs. We've been looking at the Qs a little bit. And what did we get, guys? A wick down through today, guys, but it didn't break through. So definitely we got to keep an eye on this. Are we going to keep working our way back up there towards the 350? Or are we going to work our way back towards the 315s here in tech overall? So one of the things that I wanted to do today is look at something a little bit different, point out the sectors that I saw actually moving and what we could actually trade upon. So one of the sectors that I've been looking at, guys, and we're going to run through them all here. First off, of course, energy, guys. Energy's been super strong. This is kind of more into the gas. And you seen gas, it's been rising. One of my favorite gas plays that I called out last week that I like only when I really see a trend in gas. I only use it in oil. When we're seeing a trend in oil, we want to go ahead and jump on that gas pressure. So I use this. This is Gush. This is a 2-time leveraged kind of oil and gas. And look at it the last couple of days, the last nice little candle formation there, pushing out there to the 85. Let's see if we really get a rip out here on Gush overall. Next up, we can look at basic materials. Silver actually having a good day today. Silver looking good, starting to approach a resistance here. Let's see if we break out in silver. Definitely keep your eyes in that. Coal already a huge breakout, guys. You guys can see that. Gold with a nice breakout there. Let's take a look at GOLD, an actual stock in here. And what do you see, guys? Look at this daily chart, breakout in gold, guys. So definitely keep your eyes on the basic materials here. So this is what I do a lot of the times when I'm doing my analysis, guys. I'm running through different industries, finding out where I can find the opportunities at. Copper looks like it's pulling back, but it also looks strong. You can look at FCX in this sector. This is one of my favorites of this one. And look, we had a strong time, a pullback. Let's see if we get a rip out through 45 tomorrow. Let's keep going. Healthcare. I'm only really seeing kind of medical distribution, but I also could see kind of facilities. I was calling out Rite Aid. Rite Aid was one definitely on my watch, guys. Keep your watch on this one. This chart's looking pretty good. RAD, and definitely another one that was ripping in this sector, CVS. Look at this chart. This is a daily chart. No one's been talking about CVS's 15% move lately. That's a pretty good move for CVS there. All right, so let's keep going. The next one up that I really wanted to talk about and get into is kind of more of consumer cyclicals here. Consumer cyclicals look like they're pulling back, but they had a strong candle today. And I was trading actually some. Here we can look at XPR here. XPR is definitely going to be one of my watches. Look at this rip out from today. This was actually one that I called out on my Twitter, guys. So definitely stick with me in the morning. I'm going to try to help you guys out, try to call out these plays as I see them. I was using a 1 minute chart this morning, and I used kind of a VWAP bounce play to deal out with this 330. But if you can look out, it actually even has a bigger time frame play here on the 5 minute, or you can even go further back, multiple time frame breakout. On the 15-minute, you see this resistance, this trend line down, breaking out. That's what we want to see, guys. Good trade there. EXPR, Express. So retail department stores are doing really good. How did Macy's do today? I know it had a strong candle on Friday. Look at that. Look at that. This is one that I kept pointing out, guys. Look at department stores. Look at department stores. DKS maybe even getting a nice push. Watch out for this one. But KSS, I know, got a push today. I can already picture it. Look at this one. Nice breakout there. And KSS, good volume too. 4.76 million shares traded here. Definitely good volume there for department stores. Look out for that. I know a lot of people have been loading the boat in Nike. Maybe Nike starts getting strong, but I like these cheaper plays in retail. So definitely keep your eyes on those retail plays. All right, guys, let me know if there's a play that you guys have out there to keep a watch out for. But today we also did get the news that Discovery has confirmed here, guys, that they merged with AT&T Warner's media assets for Discovery's platform for the creation of a standalone global entertainment company. I'm super excited about this because I was already a little bullish Discovery. I think with this combination, they're going to be able to get about 19% market share. And I'm going to be looking to see if they can start really pushing into the market, competing with a Netflix, a Hulu, a Disney. Let's see if Discovery can really start pushing. And now, one of the things is teamed up with AT&T's Media Warner. Definitely we're going to take a look. All right, Green Positive. I'll do it for you because you're the only one that had what I call the cojones to put it into the chat here. AMC. I'll look it up. I got you. Look at this chart. Boom, baby. What a rocket today. To tell you the truth, easy pattern to trade today, guys. And you don't get this often, but right out the gates, it was a nice little reward. Look at this little easy pattern that I had drawn out. I saw this in the morning, guys, bouncing off the VWAP multiple times. It pushed right back up there toward 1430s. You could have taken that rip out towards 1440s. And not a bad trade there right to start it off. But it's a little choppy as it gets later in the day, guys. As the day traders get out, day traders usually are out around 1030. Look what happens to this one around 1030, 1016, 1015. 1030. Oh, there you go. It breaks actually this pattern and it comes right back down towards it. But if we draw a 15-minute chart, that's what you want to use, guys. That's what you want to use to get around kind of the little breakouts. So if we draw a 15-minute chart, we're going to be able to see kind of this chart always kind of bouncing off the VWAP. It extends, bounces, guys. Look for those supports to hold. Now it's going to be stuck between this kind of line here. And we can look to see if we can get breakthrough on the downside, 1264s. On the upside, we need to get through this level that it kind of keeps rejecting, which is that 1406 level. Let's see if we can get above there. And looks like after hours, we've already pushed above there, broken out. And now what you want to do is you want to see that kind of 1406 hold and not get broken down through. Now, this is probably going to come down a little bit towards the open tomorrow. So look to see how it does near this kind of 1450, 1440 area when this pullbacks. I would love for it to come back to near this 1425, 1440 area, and then curve right back up through 15 tomorrow morning. So there you go. I took a look there at AMC. Hope you like that. Wanted to break it down and give you guys some stocks here. I'll go through a little bit more at the end there, guys. Let's get some likes up. Let's get this up there towards 50 so that we can get towards PubMatic interview here, as I want to go ahead and get into that. Next up, we want to talk a little bit about some of the kind of the earnings today, the earnings that we got. I need to get my earnings calendar up here. Let me get the earnings calendar here. All right, guys, so one of the earnings that we're going to talk about is Fisker. There wasn't too much today to talk about, but we can talk a little bit about Fisker here. Fisker actually reported a quarterly loss of 63 cents per share, which missed the analyst assessment of a loss of 19 cents per share. So definitely not what we wanted to see there. That's Fisker, guys. So definitely FSR taking a little bit of a hit in after hours, but this one had a push here because it had a drive today, catalyst today. So we're going to keep an eye on it as we're starting to get that volume push, what I always talk about, what I want to see. So with Fisker, you really got to keep a close eye on it. This one can get ripping at any day, any moment. So I think, the biggest levels to watch are going to be when we get up towards the resistance of closer towards 1225, 1250s. So keep your eyes on when Fisker gets to that level. Next up, guys, we can talk about XL Fleet Corp here, the leading provider of fleet electrician, pretty much in semi truck company here. So XL here, first quarter 2021 results generated revenues of 0.7 million compared to 1.2 million in the prior year. Exited the first quarter of 2021 with a cash balance of 404 million as of March 31st, 2021. Achieved over 4,300 cumulative hybrid and plug-in hybrid systems sold in the first quarter of 2021. So really not the craziest, but I did like they did add that they announced acquisition of World's energy efficient services. So this is definitely going to help them in their electric adoption and expand XL's charging grid infrastructure offering. So as we can see, let's take a look at XL here and see what we see on the chart. All right, on the hourly, it's really trying to bottom here somewhere near the $6. That's kind of like you can see those multiple bottoms coming down here. Now, one thing that I will draw out, and I can see kind of this look right here is, all right, so we're finally starting to kind of get this kind of bottom look. Now, can we kind of hold this and really start trending back upwards? So now that we got this kind of look, we're testing it. We want to hold this $6. You got this kind of bottom look. Let's start pushing back up there and hold past 650. If we break 6, we're probably heading down towards 540, and we could even be heading down towards 5. So be careful there in XL. Just wanted to point that out on the chart today. Showing you guys a little bit extra that I normally do. Normally don't go into these charts, but I wanted to show you guys actually the charts going through here. So definitely smash the like, guys. Let's go ahead. Let's keep going into. Let's get into our interview. Looks like we got 31 likes. Go ahead and give me the likes, guys. Hanging in here. Could have called it a day. Went to the dentist and said, nope, Money Mitch, the money mob is calling. I'm not going to let the money mob down. Give me a thumbs up, guys. Give me a like. Let's get into our interview. When we return, guys, we're going to get into PubMatic and what is the story of PubMatic. You guys know that I've been a big fan of PubMatic, but when we return, you guys get finally the interview here with CEO RAJEEV GOEL.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
Welcome back, traders. Welcome back to Money Mitch. I'm super excited to get into our interview today. As you guys know, I've been a big kind of bull in the programmatic space, and there's no other company right now that leading the space than PubM here, programmatic. We're about to get into this interview. As you guys seen me talk about the story, I really wanted to get on to our CEO here. So today we're going to go ahead and bring on RAJEEV GOEL, the co-founder and chief executive officer of PubMatic. Let's go ahead and bring him on here.
Hey, Mitch, how are you doing?
Welcome to the show. Welcome to the show. I got to say, I'm a big fan. I've been watching you since that December 9th initial public offering, and I'm super excited to hear the story today.
Thank you. Well, great to be on the show, and excited to spend some time with you and your audience.
Definitely. So first up, like always, I want to hear a little bit about your background. I did hear a little bit that you ran a custom golf equipment in college. So you got to tell me a little bit about those college days and tell me how all that journey really led to PubMatic.
Yeah, absolutely. You're 100% right. So, I was born and raised in Silicon Valley. My parents worked in tech. So kind of all of our dinner time conversations were around, technology and entrepreneurship. And I guess that rubbed off on myself and my brother, one of the co-founders at PubMatic. But our first company was actually, as you said, started in college. Custom built golf equipment direct over the web. Sequoia-backed company. It was just an awesome business. We were very early in e-commerce, and I still play golf today. And I just recently actually replaced my 20-year-old chip shot clubs, and I'm doing a little bit better on some more recent equipment. But that's really how I got started in tech. I loved that experience so much. I knew that I needed to start another company. I did work for a couple of big companies like SAP, the German software company in between, but started PubMatic back in 2006, and here we are today.
Hey, excellent. I would love to hear it. I mean, the golf clubs had to be good if you just gave them up. So that's definitely.
They're pretty good, although I could use some more practice for sure. And the pandemic gave me an opportunity to take my kids out golfing too. So it had its upside there.
I definitely think you enjoyed a little extra family time with the pandemic. But let's get into the second question. You recently just announced that first quarter of 2021 financial results, where the revenue and adjusted EBITDA were above the guidance, and also while raising that 2021 financial outlook. How did you guys achieve this great earnings report?
Yeah, thank you. We're super thrilled about the Q1 achievement. Builds obviously on top of a really strong performance in Q4 as well. Our first public company quarter, and I think there's a couple of things really that are driving our market share gains and strong performance. The first is that we're seeing really great growth in all of the ad formats and devices that we support. So that's mobile, which is mobile web and mobile app. It's video, which is both kind of short form digital video as well as CTV, and then as well it's desktop, which, believe it or not, is coming back as well. So we saw really great growth in all of those segments, and then I think the second key factor that's driving our performance is it's no secret. Obviously, we're sitting here at the beginning of the reopening in the U.S. market, some of the other markets around the world. And so digital advertising is set to really have a strong year. It's an industry that's several hundred billions of dollars. And in the US, which is maybe about 40% of that, it's going to grow 20% this year. So I don't know too many markets that are a couple hundred billion, growing at that rate. And we're going to keep growing our market share. That's our plan.
Definitely. I mean, you guys are in a space with some big boys. You could talk about Facebook, Google, and the trade desk, but really, how are you guys going to achieve some of this market share and start taking it away from some of these established organizations?
Yeah, I mean, to your point, right? Obviously, a couple of great and very large companies that you mentioned. And I think what's different about us is that we really approach the digital advertising opportunity through the lens of infrastructure. So what's unique about digital advertising and real-time bidding is that the ads have to be processed in 100 milliseconds. So that's, almost literally the blink of an eye. And it's very data intensive. There's a lot of data that gets generated with each ad impression. And we're at the scale now of processing several 100 billion ad impressions per day. And so what we recognized very early in the life of the company is that we needed to have the very best infrastructure in the industry. And that means being able to do more in terms of speed of processing and amount of data we can process, but also doing it extremely efficiently. And that infrastructure-driven approach is what makes us unique, where number one, we're able to generate better outcomes by owning all of our own infrastructure rather than being in the public cloud like an Amazon AWS. Second, we're able to be more transparent with our customers. And then third, we're able to innovate at a much more rapid pace. And that pace of innovation, again, leads to more market share gain, more revenue growth, and then it creates a really nice flywheel for us.
Yeah, definitely. I'm bringing this up in the investment presentation, but what I want to get into here is I must say that I'm impressed. We just went through kind of this pandemic and they're starting to move out. And I say this because I look at the growth, and in 2020, PubMatic grew its revenue at 31% over that 2019, and well over the kind of the industry average here of the growth at 12%. How did the pandemic really affect the company, and how are you guys moving forward from the pandemic?
Yeah, so obviously pandemic was a huge impact from a human perspective as well as from a business perspective. And what we saw in the pandemic was a couple of things. Number one, consumer behavior, I think, has shifted in a big way, right? A lot of things that we all used to do offline, we now do online. And those are things like fitness classes, seeing our doctor, even car shopping, has largely moved online that, used to go into a dealer to do those transactions. So I think there's a much richer set of transactions and more of those transactions that are happening online. And then the second thing, as we thought about how to execute, the first job was to make sure that all of our team members were safe. That started in March of last year. But then as the pandemic moved into Q2, one of the great things about our business is that we have a track record of really strong profitability. So I think last year was our 8th or 9th year in a row of adjusted EBITDA profitability, 5th or 6th year in a row at net income. We've been cash flow positive for 4 or 5 years in a row. So, strong track record of profitability. And so what we did is we said, okay, the economy is going to turn at some point coming out of the pandemic. We don't know when that's going to be, but we want to be prepared for when that moment comes. And so we actually stepped up our investment in Q2, right in the teeth of the pandemic last year. And now we didn't expect, this digital growth to happen as quickly as it did. But when it did happen starting in Q3, we were really well positioned to capture market share. And I think that continues to today.
Yeah, it's all about strategy, and sometimes you got to take some risks. So it looks like the risk paid off there in Q2 of last year. One of the things that we've been hearing is talks of the reopening economy, right? And so my question is, are you seeing a certain industry publisher, pushing for more advertisement? I want to show here that from the investment presentation, some of these publishers that choose PubMatic. I mean, some of this list can go on and on if I went through the companies. But just tell me a little bit. Have you seen any trend in any of these, kind of pushing for a little bit more?
Yeah, absolutely. So we see trends really in a couple of areas. One is on that buyer side, right? So what verticals are growing in terms of ad spend, and then the second is on the consumer side of things, right? Which of course relates to the publisher. So from a consumer perspective, it's been very important that we're an omni-channel platform, meaning we can meet the consumer, whether they're using a mobile device, a tablet device, a connected TV device, a laptop, right? And it's really hard to predict where consumers are going to consume media and how they're going to spend their time. The pandemic is a perfect example of that, right? We're all sitting in our offices one day, and then, the next day we're all at home, right? And so mobile consumption goes through the roof, CTV consumption goes through the roof. Now we're starting to reopen, so people are going back to the office. It's happening at a different pace in Europe than it is in Asia, than it is in the US. So we think it's really important that we be where the consumer is, however they're consuming media. And so I think we're doing a great job around that. And then the second is on the advertiser side, where we are seeing, certain verticals took off last year, like e-commerce, of course, shopping, technology vertical where people were buying a lot more tech products. But in Q1, we've started to see reopening verticals come back to significant growth in ad spend. So these are verticals like food and drink, style and fashion, automotive, so things that were much quieter during the pandemic. And so we really expect to see more of these verticals pick up the spend on our platform in the second half of this year. And so we feel like we're well positioned for how the economy is evolving.
Yeah, definitely. I really appreciate you actually giving us some insight, because that's really what it's all about. And that's why I wanted to touch that question. Now I want to get into a little bit of that rise of the mobile video. We're seeing that huge price bidding wars for the in-app header bidding. How does your company handle this, and how does it make it efficient?
Yeah, so mobile and video have been a huge area of growth for us. In fact, in Q1, our combined mobile and video revenue grew 83% year over year and represented 63% of total revenue. So it's not only growing rapidly, but growing as a share of our overall business. And we're quite deep into in-app header bidding. And without getting into all the technical details here, in-app header bidding is one of the primary ways to create an auction environment within an app on a mobile device in order to efficiently process these ads. And so we have a great solution here called OpenWrap Software Development Kit, or OpenWrap SDK. And that's been deployed by many publishers around the world. And that really manages the auction inside of the app. So when a consumer is viewing content, they can the ad, we can auction the ad and run that in a very efficient way. And we can do that in display ads. We can do it in video. We can do it in rewarded video, which is key to the gaming vertical. We can do it in interstitial video. These are kind of the full screen pop-up videos. So again, I think it's all about having the right technology and the right infrastructure to be present in the way that the consumer is evolving and how their habits are evolving, so we can deliver ads at the right place and the right point in time.
Excellent. So one of my last question here is going to be mainly focused on the right-hand side here. Of course, we could focus on that 69% ad impression increase, but I think this has a lot to do with it. And so one of the things I'm seeing is the cost per revenue here of 1 million ad impression going down. As stated here, from Q1 of 19 at $1.48, going all the way down to Q4 of just 2020 down to 73 cents. How are you guys achieving this cost reduction here? And it definitely just shows that as the company just keeps getting larger and larger, you guys are being able to attack the cost benefits here.
Yeah, you're exactly right. And again, this goes right back to our key competitive advantage around having that infrastructure focus. We take a really systematic focus on infrastructure excellence. And so that means having a lot of great capabilities, being able to innovate at a very rapid rate. But it also means having very efficient infrastructure. And so we have engineers that literally are just dedicated to figuring out, and these are super smart engineers, how do we make database queries more efficient? How do we consume less power in the data center, right? How do we use fewer servers to process, 1 million ads or 1 billion ads? So we're constantly evaluating how to make our infrastructure more efficient. And by owning all of the layers of the infrastructure stack, which is the networking layer, the hardware layer, and the software layer, it gives us, a big canvas in which to explore. And so we plan to continue to decrease the cost of processing ad impressions. And the beauty of that is that, as we grow the top line, as we can then lower the infrastructure costs, that means we're able to capture a higher degree of profitability, and we can reinvest a portion of that back into innovation for our customers and continue to make their businesses better.
Excellent. So the last question I have, I'd go into, and I'd point this out here, is that, one of the things that really stood out to me was how you guys directly monetize existing customer growth without waiting for that contract renewal. We all like that, kind of the renewable revenue, but I definitely like kind of the approach here. Explain to me how the percentage is up to 109% here for 2019, and then looking into 122% for 2020.
Yeah, absolutely. And the good news here is our numbers continue to improve. As part of our Q1 earnings, what we announced is that our trailing 12 months, so the last 12 months, net dollar-based retention is now at 130%. And so I think that's a clear metric around the share gains that we're seeing on our platform. And really what it comes down to is innovating on behalf of our publisher customers and continuing to drive great monetization. And again, we're doing that in mobile, in CTV, in video, in desktop devices, and we're doing that around the world. And as we, continue to drive these share gains, it means we're able to drive more revenue to our publisher customers, and that causes them to bring more inventory onto our platform because they see that, that we're performing well for them. So we're really excited about that metric because it tells us that, we're serving our customers well. And ultimately, that's what we're in business to do.
All right. And with my last question, I just want to leave you with is what would the investor out there maybe not be paying attention to that they should be paying attention to that programmatic is definitely defining here?
Yeah, absolutely. So, I would say, look, programmatic is a large market. It's growing rapidly. And so we're really excited to be in this, dynamic environment. Clearly, there's an increased shift to digital and to online, coming out of the pandemic. This is a trend that obviously was already in place, but has only been accelerated. And I think we have a pretty unique offering for investors. When you look at the revenue growth, we've raised guidance for the year to over 30% growth for the year. When you look at the profitability and you look at the revenue visibility afforded through our net dollar-based retention, I think it's a pretty unique set of factors. I mean, in Q1, we're hitting at, the rule of 40, right? Add the revenue growth with the EBITDA margin. 40 is considered good. We're at over 80 just in Q1 of this year. So encourage your audience to take a look, and we're looking for long-term shareholders.
Well, hey, you guys heard it first. Thank you for joining me, RAJEEV GOEL. This is the co-founder and CEO of PubMatic. And definitely, guys, check out PubMatic on the NASDAQ, trading under the ticker PUBM. So definitely check that out, guys. As you guys know, it's a Mitch story stock. And as you guys hear here, definitely has some defining contributions and differentiating from the others out there. And as you guys can see, the digital is here to stay. So thank you for joining me. Thank you, RAJEEV.
Thank you, Mitch. Really enjoyed it. Appreciate your time.
Hey, looking forward to bringing you back on.
I would love that. Thanks.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
Welcome back, traders. Welcome back. I hope you guys enjoyed that interview as much as I enjoyed doing it. I mean, to tell you the truth, guys, this was a company that when I first started in Benzinga, I was talking about this early in the year with pre-market prep, and I called this one out before it did a nice breakout. Let's take a look right now it's recently been pulling back, but I'll take a look and I'll also call it out where I called it. Back when I was calling out this stock, I was calling it out in early January before it made this big pop up, and everyone was looking at me a little bit crazy when I called it here from 25 to around 35. But then this stock really ripped up. It went all the way up there towards around 60, 75s, and it kept pushing. Tried to go for another breakout, but really couldn't get out of this kind of 45 support here. So that's really where we need to see it get back up to. But it's coming back down towards this IPO pricing, and that's actually kind of beneficial if you didn't get it in this time. So now let's go see if we can get it back down closer towards that 30 or 25. I'm definitely going to keep an eye on this. But let's go ahead and let's do some ticker time from the chat. I want to do a little bit of ticker time in the chat. So hit the like if you guys enjoyed that. Put some tickers in the chat if you guys want me to take a look at, and I'll go ahead and I'll take a quick look. Robert, AMC is moving. It's crazy. I actually was looking at EXPR Express. Express was a good move today. I definitely like that move today. Nice move out there. Nice little breakout. I'm going to keep an eye on that one. Another one that was maybe a Wall Street Bets, maybe we're getting a Wall Street Bets breakout because GameStop with a nice breakout also. So we're going to keep an eye out on some of those moves. Another one that you could take a look at in there, NAKD, are we going to get a naked breakout? Uh-oh. Keep your eyes out, guys. Keep your eyes out on the Naked brand. Who knows? Maybe you get a breakout in Naked brand if you see Wall Street Bets plays making big rips. All right, let's keep going. Let's go to the next one up here. JWN. Yes, this one is a part of that department store breakout. These are the ones that I want you guys to be taking a look at right now. JWN looks great. I like this one. Another one you can look in this same industry. Let's look for a little bit cheaper one. Maybe an American Eagle Outfitters, AEO. Maybe that one starts getting a move. ANF. Maybe Abercrombie. Look at Abercrombie. Look at this push. This is that department store push, guys. That department store push. That's what we're going to expect to see. Another one that you can maybe eventually see moving, maybe the cheaper ones like Ross, but really it's kind of the more expensive ones. You're talking KSS, and that's another one that's ripping out there. So keep your eyes on that one. Let's keep going here. Let's go to Clover. The Clove. All right, guys. This one is pushing up a little bit. But to tell you the truth, this one, I liked it back when it was breaking out here in the 8s and the 9s. Don't like it so much now. I think this one's heading down to test this low. This one might crack down and go down towards below 5 first, Pat. So just be careful there. I did like it when it started coming back up 10 because you had all this volume that stacked in. But as you can see, it quickly turned around. Even though it had all that volume, it did not continue moving there. Definitely M's a good one. Definitely Macy's is a great rip. You know what I love about Macy's is that if you look at the weekly chart, look at this trend, guys. This trend does not go away, guys. It's just sideways. And so whenever you get that move towards the trend, you can grab it somewhere there closer and then risk down below the next level. Boom, you could have been grabbing that maybe around 16.25s, risk down towards 15, somewhere in the 16s and risk down towards 15. A little bit before that, it would have been the 15 to 14 game. But those little risks, those 75-cent risk could have got you a nice 3-point gainer here. Not a bad move there in Macy's. All right, let's keep going. Nick's bringing up a good one here. NNMD. All right, let's take a look here. NNBM here, Nano. Nano's not the worst. Let's see what happens with different kind of stocks in this area. One of the things that I've been looking at is, tech's out of favor, but can it come back into favor? Some of the ones that I'd pay attention to. But let's take a look at your daily chart. See how sideways you are right here. So I take a look at, try to find some prior resistance. So I take a look at the chart right here. Prior resistance. Okay. Looks like we came back. We came up through here, found resistance twice, and then pushed up, came back towards it, and then pushed above it. So that's kind of the next level down. Looks like it keeps fighting this $6 level, which is another support from this area, which also is a resistance from that wick in that other pattern. All right, guys. So now we want to see, okay, so we came up there. Now we've come down here. Now, can we break out of this downward pattern here? Okay, so what I would look for is, can we come back up through this? Can we come back up through 8? 8 to me seems like a very important price point. When we come up through that area, we want to see how you get strong at $8, because $8 needs to come with kind of this 30 million, 40 million shares traded, kind of like you get this curve right here, so that you get that curve back up through 8, and then that volume pushes you to the resistance, and it actually breaks out through the 10. This is one that I would wait to see a little bit of movement, unless you're trying to catch the bottom here and risk, let's say, maybe off of this bottom here, which is a, let's see the low there. The low is 565 there for you guys. That's not the worst approach. I can take a look at some other technology stocks that I've been looking at. Triple D is on my radar, guys. Triple D is one to watch out for. Another one that I liked that it's supposed to have earnings today. I didn't take a look at this one, DM, but I'm definitely going to take a look in the long run, because I do like this one. DM, Desktop Metals. You guys know how I'm into my SPACs. I'm going to see if this one can come back up through 14. It looked like it rejected it today. Let's see if it can come back through 14 in the next couple of days. All right, going to keep going through last couple of ones here. Fords, they're going to be the last stock of the day here. Let's take a look. This is ripping out. Can it be the trade here? The lightning trade. As you guys know, on the 19th, they're going to be releasing the lightning electric truck, the F-150 pretty much. Let's see what happens. Let's see if this one pushes up. I think you might get a run towards 13, but I don't think you're going to get too much further than that. So if you're in this one and maybe you want to take a little bit of profit into the run, I can't blame you for doing that. But I think this one's going to be one of those buy the rumors right now into the news. And once the news hits, boom, it'll probably get knocked right back down. Definitely, guys, hit the like. If you guys enjoy me going through these stocks and enjoyed PubMatic's PubMatic's interview, definitely, guys, hit the like, hit the subscribe below. I'm going to keep doing this, guys, every single day. I might be gone tomorrow. Might have to get a little bit of one of those things called the root canals, but don't worry, guys. I will definitely release a video for you guys. I'm not going to leave you guys empty-handed. What I'm going to do is I'm actually going to do a burn process. So I might record that and just kind of give it out. That way you guys can at least see something, some kind of process, some NFT process. So definitely, guys, smash the like. I'll be back on Wednesday. And we'll just keep going through, guys. We're going to be going through. I'm going to be getting some bigger CEOs to interview. If you guys want to see another CEO, definitely let me know in the comments below who you guys want me going after, and I'll definitely get them on the show. Like always, guys, smash the like for Money Mitch. Join the Money Mob. Like always, the bull market is here to stay, and Money Mitch is definitely here to teach you guys the story stocks. And there's a market opportunity out there, and Money Mitch is here to help you guys find it. I'll see you guys tomorrow. Definitely hit the like. See you guys later.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all